All right, you guys sent us some pretty interesting stuff this time. A whole bunch of reports on Muthoot Finance Limited, a financial services company over in India. They just dropped their latest financials for the quarter, ending September 30th, 2024. So let's take a deep dive into these reports, see what kind of story they tell us about Muthoot Finance. Ready to make sense of all these numbers?
Absolutely. Let's jump in.
First thing that jumps out at me is the revenue growth. It's pretty impressive. They brought in about 37 billion rupees this quarter, up from about 30 billion the same time last year. That's a pretty significant jump. Are we talking about like normal growth here, or is this something special?
Oh, no, that's definitely a big leap. And if you look closer, it looks like their interest income is the big driver there. It went from about 25 billion last year to over 32 billion this quarter.
So what does that tell us about their main business?
It seems like their lending business is doing really well.
Okay, so they're making more money, but are they lending out more too? What's happening with their loan portfolio?
Yeah, you're asking the right questions. Their loan portfolio has definitely gotten bigger. Their balance sheet shows loans are over 904 billion rupees this quarter, compared to about 770 billion in Q2 2023.
Whoa, that is a huge increase in lending activity. But hold on, what about their cash flow? Are they actually making cash from all these loans? Or are they borrowing a lot to fuel all this growth?
That's a really important question. Interestingly enough, their cash flow statement shows a net outflow, 107 billion rupees from operating activities. And that's actually up from an outflow of about 45 billion in the same period last year.
Okay, so that's definitely something to keep an eye on. What could be causing that increasing outflow?
It's tough to say for sure. Could be a bunch of things, right? Maybe they're increased lending. Maybe they're investing more in growth. Maybe it's even just changes in how they're managing their payments. To really understand it, we need to look closer at their investing and financing activities.
Gotcha. We'll definitely keep that in mind as we go through all this. Now, before we get too deep into the numbers, you mentioned they released both standalone and consolidated reports. Can you just quickly remind us what that means?
Sure, no problem. The standalone report is like looking at Muthoot Finance Limited by itself, just their performance as an independent company.
Okay.
The consolidated report is different. It takes into account all their subsidiaries, like Muthoot HomeFin and Belstar Microfinance.
Oh, right.
So it gives you a bigger picture of how the whole group is doing financially.
So it's like standalone is Muthoot's individual report card, and consolidated is like the whole family's combined grades.
Exactly. And when you compare the two, you sometimes see some interesting differences.
Okay, so what are some of the big differences between the standalone and consolidated numbers this quarter?
Well, their consolidated revenue was almost 40 billion rupees.
Wow.
Profit before tax was almost 17 billion, and their final profit was about 13 billion.
So their consolidated numbers are even bigger than their standalone performance, which makes sense, right? Since it's including all those subsidiaries.
Yep, exactly. And the consolidated cash flow is a bit different too. They had a net outflow of about 113 billion rupees from operating activities just in the first half of 2024.
Okay.
Again, it's always good to compare these numbers to previous periods.
Right, see the trends.
See how things are evolving.
Okay, before we move on, what do the auditors have to say about all this?
Good question. The auditors were Krishnamurthy and PS, DY and Associates. And they gave an unmodified conclusion for both the standalone and consolidated reports.
Which basically means?
Basically, it means they believe the reports are accurate, that they fairly represent the company's financial performance.
Okay, good to know. It's like getting a thumbs up from the financial detectives.
Yeah.
All right. I got to admit, these reports are pretty dense. Were there any details that really jumped out at you, things that maybe a normal person wouldn't catch?
Oh, absolutely. There are definitely a few things that caught my eye. One interesting thing is they didn't issue any shares under their employee stock option scheme this quarter.
Why is that interesting?
Well, employee stock options are usually used to motivate employees, to attract talent,
Right.
So the fact that no shares were issued, it could mean a few things. Maybe they already issued a lot of options before, or maybe they're switching to different ways of compensating employees. It's something to investigate further.
Okay, interesting. What else stood out?
Let's see. They mentioned they have enough security cover for their debt securities.
No.
A total value of 197 billion rupees.
What does that mean, security cover?
It means they've pledged assets, like property, to back up their debt. So if they can't pay back their debts, they have these assets to cover it.
So it's like a safety net for investors.
Exactly. Shows they're serious about paying back their debts.
Gotcha.
Oh, And they also declare an interim dividend.
An interim dividend.
Yeah, it's basically a payment to shareholders before the end of the financial year.
So they're sharing some of the profits early.
Yep. It's usually a good sign. Shows the company is confident in their performance.
Okay, cool.
And then there's this whole section on Regulation 52 for disclosures. It's got a lot of extra financial insights.
Like what?
Well, for example, their debt-to-equity ratio is currently 2.82.
Debt-to-equity ratio. Can you refresh my memory on what that is?
Yeah.
And what does this number tell us about Muthoot?
Sure. It basically measures how much debt a company uses compared to its equity. So a ratio of 2.82 means for every rupee of equity they have. They also have 2.82 rupees of debt.
Okay.
It's up a little bit from last year, which means they're using more debt to run their business.
So is that a good thing or a bad thing?
Well, it depends. It can be a way to grow faster, but you got to be careful. Make sure they're not taking on too much risk.
Gotcha. What else do these disclosures tell us?
Well, their net profit margin is pretty impressive. Over 30% for Q2 2024.
What does that mean exactly?
It means that for every 100 rupees of revenue, they're keeping over 30 rupees in profit.
Yeah. Wow, that's a pretty healthy margin.
Yeah.
Okay, now for the more technical stuff. Can you break down the capital adequacy ratio and provision coverage ratio in simple terms?
All right, so these are really important metrics for financial institutions. The capital adequacy ratio, or CIR, it basically measures how much capital a company has compared to its risk-weighted assets.
Yeah.
Think of it as a measure of how strong they are financially and how well they can handle losses. Muthoot Finance's CIR is 26.96%, which is well above the minimum requirements.
So they've got a good cushion to absorb any potential losses.
Exactly. And then there's the provision coverage ratio. This one tells you how well they're prepared for bad loans.
Like loans that people don't pay back.
Exactly. It measures how much money they've set aside to cover potential losses from those bad loans.
So a higher ratio means they're being more cautious.
Yeah, generally speaking, it means they're managing risk more carefully.
Gotcha. Okay, we've covered a lot of ground already, but there's one last section I'm really curious about. Related party transactions. What exactly are those?
Okay, so related party transactions are basically deals between the company and people or entities that are closely connected to it.
Like who?
Like directors, key personnel, their relatives, or even companies they have a big stake in.
Yeah.
These transactions have to be disclosed because they can sometimes raise questions about conflicts of interest.
So it's like doing business with your family or close friends.
Yeah, kind of.
And why is transparency so important here?
Because investors need to know about these relationships so they can decide if these deals are really in the best interest of the company.
Gotcha. So what kind of related party transactions are we seeing with Muthoot Finance?
Well, there are a few interesting examples. Some directors, including George Thomas Muthoot and Alexander George, have taken loans from the company. The report shows that they've paid back parts of those loans. And it also tells us how much interest they paid, which is important for transparency.
Directors borrowing from the company they manage. Is that normal?
It's not necessarily unusual. A lot of companies have policies for this kind of thing, but it's definitely something that investors should pay attention to.
Okay. What other related party transactions are there?
They also paid rent to companies that are connected to their directors.
Like which companies?
Like Muthoot Housing and Infrastructure and Muthoot Systems and Technologies.
So they're paying rent to businesses linked to their own directors. Is that a problem?
Not always, but it's important to make sure everything is transparent. Investors should ask if these deals were done fairly, at a reasonable market rate, you know.
Right. Everything needs to be above board.
Exactly. There were also some dealings with non-convertible debentures, or NCDs, where directors and their relatives bought them, redeemed them, and received interest payments.
So they're basically participating in the company's debt financing.
Yep, that's right.
And again, transparency is key here.
Absolutely.
Any other related party transactions?
Yeah, one more. Their corporate social responsibility spending, or CSR, includes funds that went to organizations connected to directors.
Oh, really? Like which organizations?
Like the Muthoot M. George Foundation and Muthoot Healthcare Private Limited.
So they're using CSR funds to support organizations linked to their own directors?
Yes.
Is that allowed?
It's not necessarily wrong, but it does raise some questions about potential conflicts of interest.
Yeah, you got to wonder if those choices were made objectively.
Right. It's important to think about whether these decisions were made with the best interests of the company and society in mind.
That's a really good point. Okay, so we've gone over a lot of information just in this first look at Muthoot Finance. What's your overall impression so far?
Well, I think they're doing well financially. Their revenue and profit growth are strong.
Okay.
But all these related party transactions definitely need a closer look.
Yeah, we need to figure out if they're being managed properly
Hmm.
and if they pose any risks to the company or its investors. It's a mix of positive performance and some areas that need more scrutiny. We'll dive into those in more detail later on.
So we saw Muthoot Finance has a lot of these related party transactions, dealings with directors, their relatives, and companies they're involved with.
Yeah, definitely raises some eyebrows. Makes you wonder, are these deals actually hurting the company or even putting investors at risk?
Well, related party transactions, they're not always a bad thing.
Really?
Yeah, sometimes they can even be helpful.
Okay, how so? Give me an example.
Sure, imagine a director needs a loan, like a
Mhm.
short-term loan, and the company provides it. Under fair terms, of course. That could actually help the director focus on their job, which ends up benefiting the company. The key here is transparency.
So investors need to know all the details to judge for themselves whether it's a good deal or not.
Exactly. Investors need to see those relationships clearly explained. The terms of the transactions, like interest rates, repayment schedules, and they need to know if it was all done at arm's length.
Arm's length.
Yeah, it means they got the same deal they'd get from anyone else. Not a special favor, just because they're connected.
Okay, so no sweetheart deals for buddies.
Right. It's about fairness and making sure things are reasonable.
Makes sense. But what about that CSR stuff we talked about? Those funds going to organizations linked to directors? That just feels kind of iffy, ethically speaking.
Yeah, it's definitely worth looking into.
Right.
CSR is a good thing, for sure.
Hmm.
But investors should ask themselves, were these decisions really made to benefit society? Or is there a conflict of interest because directors are involved with these organizations?
It makes you think, are they really trying to do good? Or are they just funneling money to themselves or their friends?
It's a valid question, and one that ethical investors should definitely think about.
So where can investors find more info about these related party transactions?
Well, the company's annual report is a good place to start.
Yeah.
It usually has a pretty detailed section on it. You can also check out news articles or analyst reports, and don't be afraid to contact the company directly. Maybe attend a shareholder meeting or reach out to investor relations.
So basically, do your homework. Don't just take their word for it.
Exactly.
Now let's zoom out a bit. What do all these related party transactions tell us about Muthoot Finance's corporate governance?
That's a really important question. Good corporate governance is all about transparency, accountability, and fairness. It's about protecting everyone
It's
involved.
just the people at the top.
Right, everyone.
Okay.
And honestly, the number of related party transactions we're seeing here and how they're being disclosed, it might raise some concerns about whether Muthoot Finance is following best practices.
So it's not just the deals themselves. It's also about how they're handled and explained.
Exactly. Transparency and clear policies are super important. Strong corporate governance builds trust with investors. It makes them feel more confident that things are being done ethically.
So does that mean investors should just avoid companies with lots of related party transactions?
Not necessarily. Some industries just naturally have more of these dealings. The important thing is how those transactions are managed, disclosed, and justified.
So look at the big picture.
Yep.
Understand the context.
Exactly.
What if an investor is still unsure after doing their research?
Well, never hesitate to get professional advice. Talk to a financial advisor or an analyst who specializes in corporate governance. They can help you understand the risks and make better decisions.
Always good to get a second opinion. All right, so we've talked about the ethics, but let's talk money. Can these related party transactions actually hurt Muthoot's bottom line?
Potentially, yes. If those deals aren't done at arm's length, the company might end up overpaying for stuff or getting worse terms than they would from someone else. That could definitely eat into their profits.
So like getting a bad deal because you're too close to the other side?
Kinda, yeah. And it's even worse if these transactions make up a big chunk of their business.
What other financial risks should investors watch out for?
Keep an eye on loans to directors or related companies. If those loans go bad, it could really hurt the company's finances, especially if they weren't careful about lending practices or collateral.
So basically, understand how much money is going out.
And what kind of safeguards are in place.
Right.
Also, watch out for any big increases in related party transactions over time. It could mean they're relying more and more on these deals, which could make them vulnerable.
Vulnerable how?
Well, it could make them look bad, like they're playing favorites. And if those relationships sour or if there are any legal issues, it could have serious financial consequences.
So it's all about balance.
Yep.
Making sure these transactions are handled responsibly and transparently.
Exactly.
Any final thoughts on related party transactions before we move on?
Just remember, they're just one piece of the puzzle.
Okay.
Don't forget to look at other things, too, like their financial performance, industry trends, competition, and the quality of their management team.
So don't get tunnel vision.
Right.
It's important, but it's not the only thing to consider.
Exactly. By looking carefully at these transactions and what they mean, investors can avoid unnecessary risks and make smarter decisions.
Excellent points. I think our listeners are now ready to analyze these transactions like pros.
I hope so.
All right, now let's switch gears a bit. Let's talk about Muthoot Finance's growth strategy. What are their plans for the future? And how might those plans affect potential investors? Okay, so we've looked at all the numbers. We dug deep into those related party transactions. We even touched on corporate governance. Phew, it's been a lot.
It has. We've uncovered a lot of interesting stuff.
So now,
Mm-hmm.
for the big question,
Mm.
what does all this mean for you, our lovely listeners?
That's what it's all about, right? We can talk about these reports all day long, but it only matters if it helps you make better decisions.
So let's say you're thinking about investing in Muthoot Finance. After this deep dive, what's going through your head?
Well, I'd be thinking about the good and the bad. On the one hand, they seem pretty solid financially. Their revenue and profit growth are really good, and they've got a big presence in the gold loan market, which can be very stable and profitable, especially in India.
Okay, so there's definitely some potential there. But what about the downsides? What would make you hesitate?
Those related party transactions would definitely give me pause. I'd want to be 100% sure I understand those deals. You know, what they're for, were they done fairly, at arm's length, all that stuff.
You'd be scrutinizing those disclosures pretty carefully.
Oh, absolutely. Looking for any signs of conflicts of interest,
Right.
anything that might put the company's finances at risk. And I'd want to know more about their corporate governance practices. You know, do they have clear policies to manage these transactions properly?
So it's not just about the transactions themselves. It's about how the company handles them and how transparent they are.
Exactly. Transparency and good governance are so important.
What else would you be thinking about?
Their future prospects. What are their plans? Are they growing into new markets? Are they facing a lot of competition?
You'd be looking beyond their current performance, trying to see if they can keep it up in the long run.
Exactly. Investing is all about the future, not just the past.
And of course,
Yeah.
you'd also have to think about your own investment goals and how much risk you're comfortable with.
Of course. Everyone's different. What might be a great investment for one person might not be right for someone else.
So there's no magic formula.
Nope.
It's all about finding what fits your needs.
Right.
Okay, so we've talked about the things to consider, but let's get practical. What can our listeners actually do to evaluate Muthoot Finance or any other company they might be interested in?
Well, here are a few tips. First, read the annual report, not just the quarterly results. It gives you a much better overall picture of the company. And pay close attention to the sections on related party transactions, risk factors, and management's discussion and analysis.
So really dive in.
Yeah. And don't just rely on what the company tells you. Look for independent analysis, too. You know, research reports, news articles, opinions from analysts. Get a more balanced view.
That's really important.
It is. And compare them to their competitors. How does Muthoot stack up against other companies in the industry? Are their financials better or worse? How do their related party transactions compare?
See how they measure up.
Exactly. And don't forget about ESG factors. Environmental, social, and governance. How are they managing their impact on the environment? How do they treat their employees and customers? How strong are their governance practices?
Those are big issues these days.
They are. And last but not least, don't be afraid to ask questions. If you don't understand something, reach out to the company or talk to a financial advisor.
It's always better to ask than to guess.
Definitely.
Well, I think we've covered a ton of ground today. We really explored Muthoot Finance inside and out.
We did. Hopefully, our listeners feel like they have a much better understanding of the company now.
And a big thank you to everyone who sent in this deep dive request. We love getting to explore these complex topics and helping you make sense of the financial world.
It's been fun.
Remember, knowledge is power, especially when it comes to investing. So keep learning, keep asking questions, and happy diving.